Hey, welcome back to another episode of the She's Making an Impact podcast. I'm your host, Rachel Ngom. Let's talk numbers, how to actually look at the numbers in your business, how to create a financial roadmap, what that looks like. I brought in an expert, Jessica, I'm gonna butcher it. She said it really well. And I'm so used to getting my last name butchered. Blasingame, I think. She's awesome. She's a CPA. She specializes in financial services for creative entrepreneurs. And today we're talking all about creating the financial plan, the financial roadmap, figuring out how much money to set aside in your business, how much to pay yourself, to look at taxes, software you can use to actually do this all your own. You might be thinking, Rachel, I don't want numbers. Don't talk to me about numbers. You need this though. Like, trust me, you need this. You can't just bury your head under the sand and think it's all going to go away, because it will not. And if you want to grow a successful business, you need to know numbers. So let's dive in. Hey, Jessica, welcome to the show.
Thank you. Thanks for having me.
Well, let's start off. Tell us a little bit about yourself and what you do.
Sure. Yeah. My name is Jessica Blasingame, and I am a CPA and also the founder of Beam Financial Group, where we work with small business owners to support them through managing their finances so that it feels more comfortable and clear for them.
Cool. How'd you get into that?
I actually started in the corporate accounting world, and then I left completely and went into a health and wellness business. So complete pivot. But then in my work in the health and wellness business, I was meeting a lot of business owners that were struggling, were really trying to figure out their finances, had a lot of tax questions. And so that sort of gave me the idea to start Beam Financial Group and help small business owners instead of being in the corporate accounting world, which I didn't like. So yeah, that's kind of my quick journey.
Cool. Well, I love it. And I think it's so important that we talk about finances, and we talk about this often on the show, just because a lot of times as entrepreneurs, we're so focused on the business that we don't look at the money and the numbers. And so can you talk to us, how do we actually create a financial roadmap?
Yeah. So I think this is a topic that's not talked about a lot, or a lot of people don't know that this is just a tool that can help them. And a financial roadmap or forecast is basically just putting some numbers behind your plans for the future. It can be really simple. I always say you can even just write it out on a piece of paper. It doesn't have to be this fancy spreadsheet with all this modeling. It can just be just starting to think through some of your plans and just putting numbers down. So it could be as simple as okay, I think I'm going to offer this new service this year, and I think I'm going to be able to get, say, one client per month. This is how much I'm going to charge. So you're starting to put, just some income numbers in there. And then you're starting to think through some of the expenses that go with that new income stream, for example. So you might think about, okay, well, now I'm doing this, so I need this kind of insurance. So let me, maybe get a quote and put that in the plan. Or I'm going to need a couple pieces of software. So let me just sort of estimate what that's going to cost. So you're just really thinking through some of these items and, putting down numbers and seeing if it's going to work for you. I think a lot of business owners don't even do this exercise. They don't even really know if what they're offering is going to be profitable, or if they're charging the right amount, or, any of that. So I like to just start getting business owners in the practice of just sort of jot down some numbers and think it through a little bit before you launch into it.
Got it. How can we do a financial roadmap if a lot of us, either we do launches and let's say it's going to fluctuate, or let's say we have an offer where we offer people can pay in full or payment plans. So that could vary by $20,000, $30,000 month after month.
Yeah.
Or even more, right? Just depending on how big that payment is and all of that. So how do you do it when you have a business that's like that? It's not so simple,
So that's the thing about a financial roadmap is it's always in flux. It's not, an end all be all plan. And you keep informing it as you get more information. So let's say as you're doing multiple launches, maybe you start to find out that 50% of your participants pay up front, 50% pay as they go. So you can kind of be adjusting your roadmap. When you first start out, you're kind of taking a lot of informed guesses, This is how I think it's going to play out. This is how much I'm charging. This is when I think people are going to pay. So you're making a lot of assumptions and you're plugging those in. And then as you get more information, more real-time data, then you're adjusting your plan as you go and you get better and better at it, hopefully, and it's hard because we're in a world that's constantly changing, and, the way we structure our business is constantly changing. But it's just sort of designed to give you a little bit of structure around, some of your plans.
Got it. And you mentioned, charging enough or charging an adequate amount for your offer. How do we figure out what that number should be when we look at all the expenses that are related to it? And what kind of a profit margin should we be looking for?
Yeah, it depends on every business. It also depends on what you're comfortable with. A lot of people are looking for a 50% profit margin. Sometimes you're comfortable with a smaller profit margin. I think the best place to start, you're obviously plugging in all your income and then plugging in any expenses you foresee having. And once you plug all of that in, I like for people to tweak from there. So if you've plugged everything in and your profit is not what you want it to be, and I'm going to elaborate on that in a second, then adjust the prices. That's what's cool about a financial roadmap, a forecast. You can kind of play with different scenarios. So you might be seeing like, okay, well, this scenario shows I'm going to make $2,000 in my first month. I'm not happy with that. Like, I know what my personal expenses are, and that's not even close to covering that, So that's one way that business owners will look at it. Like, is it covering all my personal expenses and then plus a comfortable cushion? I'm saving for tax. Like, you're thinking through all of the expenses you're going to have personally. And then you can kind of play from there. But you definitely want to be adjusting your price and then seeing how that affects the profit. So that's how I like people to sort of back into it versus like, let me set this price, figure out all my expenses, and then go. They're like looking at the outcome and then tweaking the profit. The revenue from there. Does that make sense?
Got it. Yes. So how often should we be doing this? Because at like new expenses pop up, maybe we decide we want to join a mastermind or something else, and that could be like a whole big lump sum. So how often should we be doing the financial forecasting?
Yeah, I think at the end of the year is a good time to create a forecast for the upcoming year at least.
Mm-hmm.
So that's your year forecast, like what you think, how you think things are going to play out for the year, and then each month, ideally, you want to be looking at your results, right? So looking at your data that came out for the month, looking at your finances, plug that in to the forecast. So then you can see side by side, like I estimated this, and this is what actually happened. And then making adjustments from there. So each month you're not redoing the forecast, but you're updating, you're tweaking, based on what your historical data showed you. Like, okay, I estimated that I was going to get 5 clients this month, or 5 people were going to sign up for my program, and actually only 3 did. So maybe my estimate was a little aggressive. I'm going to adjust it down now. So you're kind of just, it won't take long, right? You plug in your, month data, you tweak a little bit, and then go forward. So evaluating monthly.
Got it. And so when we're looking at our P&Ls that we're getting on a monthly basis, what should we be looking at in those statements?
What should you be looking at? Like in comparison to the forecast, or more like
in general? Because I think a lot of entrepreneurs have no clue. It's just like, it's numbers. And then a lot of what I hear from people is like, numbers make them scream. And so they're like, I don't want to see it. Like, don't make me look at it. So like, what should we be looking for?
Yeah, I think it's important to first know that you're looking at it. It's not a judgment of your performance. And that's what I think people think it is, right? It's like, I look at it, it's scary. It makes me feel like I'm a failure because it's not what I expected it to be or whatever. No, it's just informing your future actions, right? It's giving you some data so that you can make better decisions.
I think that's huge. And that could be an entire conversation on its own of like, you are not your business. You are not your results. Like your worthiness is not tied up into your business and that P&L statement.
Totally. I couldn't agree more, but it's hard to do that, right? Because it's
absolutely,
concrete, staring you in the face, and you're making a judgment on it, or you think it's making a judgment on you. But if you can kind of pull back from that and look at it in a way that like, okay, it's just helping me tweak my business going forward. So I'm seeing what's not working and I'm seeing what is working. Mm-hmm. And so that's kind of how I'm looking at a P&L. Like if I'm looking at one for my client, I'll start by looking at the income and see, what's going on there. Can I notice maybe the growth is slowly going down percentage-wise each month? Mm-hmm. That would be, some information, right? Like, is my product not that good, or am I just not marketing it well enough?
Mhm.
Maybe people just don't know that I offer that. So maybe let me think about why I might be seeing that decline, so you're getting that information to react off of. Same thing with your expense structure. There's so many business owners that aren't in touch with the expenses that are going on in their business because they're busy, right? They get disconnected. Things are running automatically, like subscription is just an example. Subscription costs,
Oh,
like
yeah.
you've signed up for all these different things. You're not even using half of them, but they're still, you're still getting charged for them each month.
You're
So
making me think of like, we spend $150 a month on Libsyn Pro. And so when we're done, I'm going to message Ariana. I'm like, are we truly leveraging that $150 a month? Like, I got to have something like where she reminds me every month to actually update that. So continue.
Yeah, I know. Actually, I preach a lot of this stuff, and then I was like, okay, I need to actually do this for myself. So I looked at my expenses in detail, like what is coming through every month, and I was like, a lot of this stuff, I don't really need it. I'm gonna just cancel the subscription. Extra costs, I also just didn't. About 2 years ago, I did this look where I was just trying to figure out, was I charging the right price? And so I went through in detail my expenses, what hourly rate I wanted, what I was paying my team. And for some of my clients, I was losing money. Like I was working for free. And I think there are so many business owners that have not done this very simple exercise. Like plug in all of your costs and what you want to make per hour and your materials, expenses, and everything. And then look at what you're charging, like per client or per project, however you want to look at it. A lot of times it's kind of shocking what's happening there. You know what I mean? And it seems very simple, but like it's a powerful exercise, I think. And that, it can really get you to want to raise your prices or cut your costs down.
Absolutely.
Usually
you realize you've been working for free, then you got to change something.
Yeah. Pretty scary realization.
Yeah. How do we figure out how much we should be paying ourselves?
Yeah. So a good exercise, if you are able to, you want to be able to run a profit and loss, right? So either you're doing that out of a bookkeeping software like QuickBooks, or you're doing that in Excel, but each month you need to be looking at your income minus your expenses to see your profit number. And a lot of business owners aren't even doing that, but that's the first step. See what your profit is. And from there, you want to set aside for taxes. So I usually recommend 25% of that profit is going into a savings account to set aside to pay your tax liability. And then from there, you have leftover money, right? Hopefully. And that's where you can start to think about, are there any costs coming up for me that are unusual?
Oh, I can't hear you. I don't know what just happened.
Can you hear me?
That was weird.
I can hear you.
Okay. Try again.
Hello. Can you hear me?
It's so weird. Try again.
Can you hear me?
Yeah. It was like all of a sudden you're speaking, but I can't hear what you're saying. Continue. Go ahead.
Okay. What was I talking about? No, I lost. I totally don't remember.
Looking at your profit and loss statement.
Yeah. Oh, okay. So you've taken your profit, you set aside for tax, you've got leftover. Now you need to think about any major expenses coming up that are different than your usual expenses, right? So maybe you want to buy a large piece of equipment, you're going to use in your business, or you're planning to hire a marketing firm, you're going to do a big launch, whatever, something unusual. You want to think about that expenditure and make sure you're setting aside for that. It's also good if you can do 5% for savings. So many businesses got killed during the pandemic because they had no savings. And that's, I know, not always possible with a new business. You're running pretty lean, but if you can, something in savings. And then you have something to pay yourself with, right? And, a lot of people have this philosophy of profit first, you pay yourself first. I don't really agree with that, because I think you could drive yourself out of business pretty quickly. If you don't have something available to pay yourself, you need to be evaluating what you can change in your business to make sure that you do have something to pay yourself. Either you can raise your prices, you can lower some expenses, maybe you're going to launch a new product, something that's going to drive up your revenue, obviously, and reduce your expenses. So that's, I think, a better strategy, because you don't want to just be like paying yourself automatically and then your business eventually runs out of money. So
yeah, we don't want that. And
No.
sorry, you can't hear me as fancy. I gave up on the microphone. I have no idea.
Oh, no worries.
But that's real life for you.
I'm rogue.
So you said set aside 5% until you hit what amount? Like what amount is a good amount to have in a business savings account?
Yeah. There's different approaches. One I like is just make sure you have 3 months worth of business expenses in a savings account at any given time. Which means that if something happened and for some reason you couldn't collect revenue or work or, whatever, you weren't generating revenue, then you can at least cover your business's expenses for 3 months before you're going to need some help, right? So that's kind of a good safety net to work towards. I like thinking of it that way because then like you're protected if something like with the pandemic, right? A lot of businesses were getting no revenue in the beginning.
I feel like 3 months isn't enough. Like when you think about what happened with the pandemic, like
I know
it's just like tomorrow is not promised. And
I know.
so I don't know, as like maybe women were focused more on security, at least I am.
Yeah.
Like especially like because we were broke. We were on food stamps, had negative money in our checking account. So I tend to err on like the side of caution of like, can we have so is there too much? Because obviously like cash inflation, you end up losing money if you have too much cash, but you need to have enough. Like, is there a point where you're like, you overdid it, you have too much in there? And this is a quality problem, by the way, that as you're listening, you'll run into.
Yeah. I think what you can do is like, you don't want to tie everything up in just like a basic savings account, right? Because then it's not growing for you. You're not making any money off of it. Like if you do have a lot of overflow, that you need to be saving, you can try to find other vehicles where you could be investing it that you can still access it. Like it's not completely tied up, like the stock market's not a great example because sometimes your money can get tied in there. You can't pull it off. Or real estate, obviously that's sort of long-term. But if there are other vehicles that you can find, we're in a changing world right now. So interest rates are going up and there now will be vehicles like CDs, the rates are going to be higher and things like that you can put your money in, make some money, while you're not using it. And then hopefully it's not just sitting in a savings account that's doing nothing, but I don't know if I answered your question, kind of went on a tangent, but you do want to make sure you're paying yourself adequately, right? Because if you're not, you're going to get burned out. You're going to hate the business and then you're going to want to leave it. So I think as long as you're comfortably paying yourself what you're happy with and you feel like, that energetic feeling, right? If you're not getting paid enough and you feel like you're slaving away, like you get unhappy pretty quickly. Totally. So covering your costs comfortably and having a cushion and all of that, then you can feel more comfortable to set even more aside for savings. I don't really think there's a point where there's too much in savings as long as you're comfortably paying yourself and comfortably setting aside for tax. But the other thing to think about is what can you be reinvesting back in your business? You don't want to hold too much up in savings when you could be like having it grow your business.
Right.
So that's kind of a tricky question.
I know. I totally put you on the spot with that one.
Yeah. So, also thinking about, is there something I could invest back in my business? Because with money, you always have to be aware of like a fear mentality. And it happens with all of us, right? You start getting scared, you want to protect yourself, and then you sort of stop taking these risks that could help you. Right. So you got to evaluate what works for you and do it in a balanced way, but you can like be thinking about, could I hire a marketing firm that would help me launch a new product, or could I invest in my employees a little bit more, which would help me drive sales too? And, so it's a tough question to answer.
It is a tough question. I'm sure it requires just like looking at each individual business to be like, okay, you have like 100,000 in the bank. You're good to like make this investment or look at this.
Yeah, absolutely. I would just start by asking the business owner, like, what are you thinking about in your business? Is there something that you really want to do, that you've been passionate about, that you want to drive forward? Let's see if we can take a percentage of that savings and go towards that. I think in people's brains, as long as you have some set aside for savings and you can cover yourself up to a comfortable amount, maybe it's not 3 months, maybe for you it's 6 months, and you could run 6 months without revenue. That might make you feel good. And then you can take the excess money and start, driving forward some of your plans or investing in some assets or things like that.
Cool. So know your own individual tolerance. I think
Yeah.
like you mentioned, like the like energetically, if you have, you know, like $100 in your bank account, as opposed to like $100,000 in your bank account, you might show up to like a sales call differently of like,
Mhm.
oh crap, I need to make this sale. So you show up differently as opposed to like, you don't really need the sale, but you're there to help the person. And so
Yeah.
like, if it's a good fit, then you're happy sharing it with them, but it's not like you're going to go out of business if you don't make the sale kind of
Right.
thing.
Right. I like that. Yeah.
Yeah.
Absolutely.
So how do you know like when you can hire the next hire,
Mhm.
how much you should be paying them, what that looks like?
Yeah. So this is where your forecast, your financial roadmap comes into play. If you have some sort of structure where you've sort of laid out the costs, you know, you've laid out the income you think you're going to collect, you've laid out the expenses you think you're going to incur, then this is where your scenarios come back into play. You can start plugging in a scenario like, now I hire one employee. And that changes the forecast in different ways, right? So you hire an employee. So now they're doing some of the work probably you were doing. So maybe you can now collect even more in sales.
Mhm.
So your revenue numbers should go up with that hire. You're also, of course, going to have costs associated with that. So you want to think through what are the costs associated with hiring someone. There's, of course, their wages, there's payroll taxes. Maybe you're offering them some benefits. Other things like maybe you're providing them with some equipment to work from home, or, you know, so you're thinking through every cost kind of associated with that person and plugging it in to your roadmap. So you have scenario one, which is no employee. This is what my profit looks like. Scenario two, with one employee, this is what my profit looks like. So of course you can't do that exactly, but at least you can start to think through, okay, well, if I think this employee is only going to increase my revenue by a couple $1,000s, but they're going to cost this per month and it's higher, maybe not, you know, but if I think they're going to drive my revenue up $10,000 a month and they're only going to cost, say, $3,000 a month, then yeah, totally win, you know? So just at least having that thought process. It's, again, not a perfect tool. It's
Right.
to get you thinking about all of these things.
How would you figure out what that new hire would bring in hypothetically, like per position?
Yeah. You know, a lot of different ways to think of that. So you could think of how many hours they're going to work, and maybe, you know, it's totally different for every business, but what they might be working on. Like maybe you think if they're working 40 hours a week, they might be able to pull in 2 clients or something like that. I mean, you know, very business specific, but
Right.
you're doing some estimates there. Or, you know, like, okay, I work for the business now, and you're probably very experienced, you know, if you're the business owner. So maybe they're not quite as efficient as you. So maybe like they're 75% of your efficiency. And you know that you brought in 4 clients a month, and they're going to maybe bring in 2 clients a month or 3 clients a month. So you're just kind of like making an estimate there, multiply those clients by the rate that you charge and plug it in that way. So a lot of assumptions are happening,
Right.
but at
Right.
least you're starting to think through those assumptions. There's just too many business owners that are like blindly like, I'm going to hire someone, I think it's great, you know. It's
Hmm.
not always great, you know.
Right.
Yeah.
Okay. What are some financial mistakes you see entrepreneurs are making?
Yeah. The biggest financial mistake is just being disconnected from their finances. I can't say that enough. Business owners aren't looking at their numbers, which we've talked about is scary, or they don't know what to look for. So anything you can do to start taking steps towards being more connected to your finances is going to help you. You know, it's data that is coming out for free for you to look at to help you make better decisions. So sometimes there's a lot of mind shift work that has to go on before you're comfortable looking at that stuff. But it is just something to help you. It's a tool. It's not a definition of how you are in your business. If you can get over the fear and get connected, you will be a more effective business owner, like no matter what. So, you know, a lot of business owners don't have a system for tracking their finances. So maybe they're in Excel and they really need to be in QuickBooks or something like that. So they have an easy way to run reports each month and just, you know, click a button and see exactly what's going on. So that's something I recommend pretty early on, is getting in a proper accounting software like QuickBooks or Xero. And then I usually, you know, I recommend for people to take a little bit of training. It's a very complicated arena that you're operating in. You know, finances, taxes are constantly changing. So if you can just get a basic understanding of what you're responsible for as a small business owner, I think that really just gives people a sense of control. There's a lot of things like estimated taxes, or how much do I set aside for saving, for paying my tax, or how do I even make my estimated tax payment? Like all of these basic concepts.
Yep.
Business owners need to learn, and they're kind of learning on the fly, but if you can take like a training, kind of understand it ahead of time, I think that's really helpful.
Very important. I'll share a funny story with you. Not
Please.
so funny. I was in network marketing, and my business grew from like $20,000 a year to $100,000 a year in a short amount of time. And I was like, what, 25 or 26? Like I knew nothing about, finances or taxes or anything. And then I ended up having a $12,000 bill to the IRS. And I was like, I don't have that money.
Yeah.
So learn from my mistakes, have a proper, keep your books, have an accountant. Now our accountant pays out like every month to the IRS. So there's no surprises. And that feels a lot better than at the end of the year of like, you owe this large lump sum.
Yeah.
You're not ready for.
A lot of the problem is like how our system is set up. So like, you went and worked with a tax accountant, right? That told you that you had that liability, and you were like, oh my God, I didn't know, I don't have the money set aside. No. And that's what is happening to a lot of business owners. They're going to the tax accountant. The tax accountant's looking at things after the fact. So they have no guidance up to that point. And that's what I've tried to do with my business, is like step in before you get to that point and guide you, because how are you supposed to know? You just start this business, it starts doing well, you have no manual or anything like that. No. And then like nobody knows, we're all figuring it out. So, and tax accountants aren't set up that way. They're set up to do your taxes and perform a function for you. They're not educating you or doing any of that. So find someone that can be a partner with you in your business. I think that's really important.
For sure. That was really powerful to have now, like having a bookkeeper and our accountant in contact every month. And so like our accountant gets to see the books and sees what's happening. And because we don't like surprises. That kind of like, that scared me. That luckily it was like right now, $12,000 doesn't feel like that much. Back then it felt like a ton. So it's like I got to learn with a smaller amount of money, so that you don't make it as you grow your income.
Yes.
More money. You know what I mean?
Absolutely. But still, it's scary when you get like a surprise like that and you weren't prepared for it. Like it's really anxiety inducing.
Oh, absolutely. Oh my goodness. For sure. What does it mean to you to make an impact?
To make an impact? I feel like one thing that's been really important to me is financial literacy. I think, and that can be in a lot of ways, right? It can be with a business, it can be with your family, with your kids, with your own money. I wasn't always good managing my money, and I know how much stress and anxiety that causes. And I want to try to alleviate that for other people. And I think that the main solution is just knowledge. Like people just need to understand, know these concepts, start working with their numbers, things like that, like connection. So that's been the way I've been trying to make an impact, is just if I can alleviate a little bit of suffering for someone related to their money, that's what I want to do.
That's huge. It's huge because I think about like me and my husband, we got married when we were 23. We had zero financial literacy. Like we didn't learn it. They don't teach you in school.
No, they don't teach you in school.
And our parents didn't set the example. And so I can't blame them. Like I didn't take the initiative to actually learn anything on my own up until that point. I was like, go to college, go to grad school.
It's not really encouraged. I don't think it's really like encouraged in our society. It's changing. I think people are trying to be more transparent about money and have more conversations, and it's less taboo than it was. But it used to be very taboo. It was like, you don't talk about that. You don't talk about what you make. You don't talk, it's considered rude, or like,
it's encouraged to get debt. So like we lived abroad, we lived in France and in Senegal, and then we come back, and I forget where we were sitting, but there was a TV playing, and we don't normally watch like regular TV. I don't know anyone that does, like with cable and all that. Yeah. And it was like commercial after commercial. It was like low monthly payments on getting new furniture, getting a new car, all these things. So it's just like society's being bombarded of like, you can get started with one easy low payment of $297, whatever that is.
Yeah, absolutely. So these companies are making money off your debt, a lot of these companies. So
yeah. Can we talk
even the tax code? Did you know like companies like Intuit, H&R Block, they lobby for the tax code to be more complicated so that you hire them.
Seriously?
Yeah. So yeah, I mean, there are like all these forces working against you that you have to like overcome, but you can overcome it with simple knowledge,
With knowledge. Like
Yeah.
my husband and I were talking, and it's like we're really proud of how far we've come with just like reading books and listening to podcasts and like listening to experts like you. So it's like these things can be learned if you take the initiative.
Yeah.
So like where can we connect with you to actually dive deeper and learn more?
Yeah, absolutely. My website, beamfinancialgroup.com. I'm on TikTok a lot right now. I've been sharing
Fun.
a lot of videos there. It's a fun space, and I'm just trying to, educate on a lot of these topics. So that's a good place to find me. I'm jessblasingame.cpa over at TikTok. Yeah.
Awesome. Well, thank you so much for being here and
Thank you
adding
for
so much
having me.
value to our audience.
This was awesome. Thank you so much. It was nice talking with you.